Most people don't lose money in the market because they picked the wrong stocks. They lose money because of two powerful emotions, fear and greed. And here's the thing, if you don't master them, the market will absolutely master you. Okay, let's get into it. On one side, you've got fear. This is what causes you to panic sell right at the bottom. And on the other side, you've got greed, which convinces you to chase the hype and buy at the absolute top. These two forces are constantly at war for control of your money. And let me be clear, if you don't get a handle on them, they will run your portfolio right into the ground. So why does this happen over and over again? Well, it's because most investors are completely trapped in this painful, repeating cycle of emotion. Let's break down what that really looks like. It all starts when the market's on fire. Prices are shooting up, the news is all positive, and it seems like everyone you know is getting rich. That's when the FOMO, the fear of missing out, really kicks in. Greed takes the wheel, and people just pile in, buying at higher and higher prices, telling themselves this time is different. And then the music stops. The market turns. As prices start to fall, that greed quickly turns into anxiety, and then into pure gut-wrenching fear. The headlines get scary. People see their money disappearing, and they just panic. They sell everything to stop the bleeding, which usually happens right at the bottom, locking in those awful losses. Now, here's what's so important to understand. This isn't a sign of being unintelligent. Incredibly smart people fall into this trap constantly. It's really a failure of emotional discipline. It's our own human nature, our hardwired instincts, working directly against us. But what if you could actually break free from this cycle? What if you could take this emotional roller coaster and turn it into your single biggest advantage? Well, the world's greatest investors have figured this out. They don't try to suppress their emotions, they understand them and use them to go against the flow of the crowd. So that's the million-dollar question, isn't it? How in the world do they manage to stay calm when everyone else is freaking out? And how do they stay skeptical when everyone else is celebrating? What's their secret? Well, it really boils down to this one iconic piece of advice from Warren Buffett. And this is so much more than a clever quote. It's the entire operating system for a successful investor. It means you see widespread greed not as a party to join, but as a warning sign. And you see widespread fear not as a reason to run, but as a window of opportunity. And this gets to the very heart of the matter. You see, great investors know that in the short term, the market is basically a popularity contest. It's driven by hype, by headlines, by emotion. But in the long term, it's a weighing machine. It eventually, always, weighs the true underlying value of a business. And this whole philosophy has a name. It's called value investing. The entire game is about separating a company's day-to-day stock price, the noise, from its actual long-term worth. When fear is running rampant, that price often falls way below its real value, and that's your chance to buy. When greed is off the charts, the price soars far above its real value, and that's your signal to be cautious. To make this idea really stick, let me give you a simple analogy that perfectly captures how market psychology works. Okay, so picture it. You're in a massive, jam-packed stadium. All of a sudden, someone yells fire. Panic just erupts. Thousands of people start stampeding toward the main exit, pushing and shoving. Your first instinct is to just run with them, right? That's the herd mentality in action. But the contrarian investor, they do something different. They don't just run, they pause. They force themselves to take a breath, look around, and that's when they see it. On the complete other side of the stadium, there's a perfectly good, totally empty exit that the panicked crowd completely missed. And that's the lesson right there. The crowd is almost always wrong at the moments of extreme emotion, extreme fear, or extreme greed. Real wealth isn't built by being smarter than everyone else. It's built by having the discipline to think for yourself when everyone else has stopped thinking entirely. Okay, so we get the problem, we get the mindset, but how do we actually put this into practice in the real world? Let's talk about a simple, actionable plan that you can start using right away. This is your game plan for becoming a disciplined investor. It's just 3 steps. That's it. Pause, zoom out, and follow value. Let's dig into each one. All right, first up, pause before you act. This might be the most important one. When you feel that powerful urge to hit sell in a panic or to jump on a hot stock, just stop, breathe. Create a little bit of space between that emotional impulse and your action. Ask yourself, is this decision coming from a place of logic, or is this just fear and greed talking? That little pause can save you. Number 2 is to zoom out. Stop staring at the 15-minute chart. Stop reacting to every single headline that pops up on your phone. Instead, look at the 5-year, the 10-year, the 20-year picture. Remember, real wealth isn't built by perfectly timing the market. It's built by time in the market, letting good investments grow over years and decades. And finally, step 3, follow value, not noise. This just means doing your own homework. Invest in businesses you genuinely understand. Don't buy something just because everyone's talking about it, and definitely don't sell a great company just because it's temporarily unpopular. Make decisions based on your research, not on the market's mood swings. So when you put all of these pieces together, you arrive at what might be the single biggest truth in all of investing. It's not about having the highest IQ or being the smartest person in the room. It's about being the most disciplined. At the end of the day, the stock market is just a device for transferring money from the impatient to the patient. It rewards self-control and a steady hand above all else. So you're left with 2 paths. You can let reckless emotions be your guide, where fear will keep you poor and greed will make you do foolish things. Or you can choose the path of calm, independent thinking. It's the quiet, often boring, but incredibly powerful way that real wealth is built over a lifetime. The last thing I'll leave you with is this. The stock market is a battlefield, for sure. But the main battle isn't against other traders or fancy algorithms, it's against yourself. Master your own emotions, and you will finally master the market.